Hello there, good evening, and welcome to another episode of Business Focus here on TV3 with me, Michael Obodu. Coming up tonight on the show, now the central bank slashes the policy rate to 15.5%, marking a 4-year low and a bold shift. Tonight we ask, how fast will this transmit into lending rates and how critical is it for the economy? Also ahead on the show tonight, as the Bank of Ghana slashes its bullion holdings to 18.6 tons from 37.1 tons, we find out if this was a masterstroke in liquidity management or a multi-billion-dollar blunder amid record high prices. Details of these and more lined up for you tonight on the show. But before we go into it, every day people face different emergencies, police emergency, fire emergency, you name it. But many Ghanaians don't know their emergency number. Here's one you would always want to remember, star 770 hash. Yes, star 770 hash is the new EcoBank money emergency number. Star 770 hash gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much more even without data. So there's no need for you to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. Dial star 770 hash now for solutions to your money emergencies. EcoBank, the Pan-African Bank, and proud sponsor of Business Focus, as well as Telecel. Before we delve into our topic for today, let's turn our attention quickly now to the currency and commodities market, as well as the T-bill front, and bring you updates. We'll walk straight to the board now, and the dollar will be bought from you at 10 cedis 59 pesos, sold to you at 10 cedis 60 and 96 pesos. The pound will be bought from you at 14 cedis 95 pesos, sold to you at 14 cedis 97 pesos. The euro, on the other hand, will be bought from you at 12 cedis 93 pesos, sold to you at 12 cedis 94 pesos. We'll be guided that these figures will be much higher at a forex bureau near you. On the global commodity front, the price of cocoa has picked up by some $59. It's trading at $4,224 per ton. Gold has shed some $193.46. It's now at $4,701 per ounce. Crude oil is also down by $3.14. It's at $66.18 per ton. We'll turn our attention now to the Treasury bill market, where, interestingly, the government has achieved another oversubscription, fifth in the row this year alone. 91-day bill going at 10.83%, 182-day bill going for 12.38%, 364-day bill going for 12.82%. And part of the things we'll be discussing today, inflation is around 5.5%, policy rate about 15%, 15.5%. Is this looking more exciting for banks to go more towards the T-bills front to actually lend to consumers? We'll be discussing all of that and more on the show tonight. This is Business Focus here on TV3 with me, Michael Obodu. We'll go for a quick breather. When we come back, we'll delve into our topics. Stay with us. Welcome back. This is Business Focus here on TV3 with me, Michael Obodu. Just gone past were some tidbits to help you better prepare for your pensions from EcoBank. Now, every day people face different emergencies: police emergency, fire emergency, medical emergency, you name it. But many Ghanaians don't know their emergency numbers. So here's one you would always want to remember: *770#. Yes, *770# is the new EcoBank money emergency number. *770# gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much more even without data. So there's no need for you to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. So dial *770# now for solutions to your money emergencies. EcoBank, the Pan-African Bank and proud sponsor of Business Focus, as well as Telecel. Now we delve straight into our topic for today. Now, in a move widely described as a major pivot, the Bank of Ghana slashed its monetary policy rate by 250 basis points to 15.5% last week. The decision is expected to bring borrowing costs to their lowest level in 4 years and marks a decisive shift from aggressive inflation fighting to a growth support stance. The move reflects the BOG's confidence in the cedi, which appreciated by 40.7% against the US dollar in 2025, supported by robust reserves of $13.8 billion. Let's hear now from Governor of the Bank of Ghana, Dr. Johnson Esiama.
The committee, that's the MPC, judged that current monetary conditions do remain tight relative to prevailing inflation dynamics. Sustaining Ghana's macroeconomic gains will hinge on disciplined fiscal policy, strong policy coordination, and targeted agricultural interventions to contain food inflation while remaining vigilant to heightened geopolitical tensions. Based on the foregoing considerations, the committee, the MPC, by a majority decision, voted to lower the monetary policy rate by 250 basis points to 15.5%. The committee will continue to monitor developments closely and take appropriate policy actions to ensure that the gains from macroeconomic stability are translated into sustainable growth.
So that was the Governor of the Bank of Ghana, Dr. Johnson Esiama, speaking last week there, where he basically announced the policy rate cut. But how critical is this for the economy, and how fast would it reflect on the economy? Joining us for the conversation today are Chief Executive Officer of Daylex Finance, Joe Jackson. Joining us virtually also is the Executive Director of the Institute of Economic Research and Public Policy, Professor Isaac Boadi. Gentlemen, thank you so much for your time. And thank you for coming in studio. I always tempted to call you Doc.
Good.
You should consider getting a PhD. Anyway,
it's good to be here.
Awesome. So first off, from you, your initial comments: 15.5%, over 100, over 12 percentage point drop from where we started from last year. Must be good news for you.
To some extent, yes.
To some extent, you say?
Yes, to some extent. And for me, there are three numbers that I want to anchor this whole discussion on. Three numbers.
Okay.
One is that inflation is 5.4%. Two is that the average lending rate remains around 20.4%.
Okay. This is prior to this current announcement.
Yes, this is a situation as at when. And then the MPC rate has now come down to 15.4%. Now, obviously, the reduction in this MPC rate is anchored in some good news. The cedi has held steady for some time. Inflation has come down to the lowest that I can recall in recent times ever. And even though the monetary policy rate has been dropping, the lending rates have also still remained kind of sticky at the same level. Especially when you look at the Ghana reference rate, and so what does this mean? It means that we now, after a year of stabilization, are ready to take a chance in growth and saying that we want to grow. So that is good news. But we also have to be cautious. We have to watch these same parameters. Inflation is one that I will watch cautiously like a hawk. Because if inflation gets hit with any kind of adjustment, rains fail, food prices rise, or there's an external oil price shock, so the price of fuel goes up, it's obviously going to have an effect. Then the other side is that the discipline that has been shown, that we have all extolled, must be kept. So on one hand, those three numbers, they show that, listen, this is a reasonable action. Last year, the city appreciated by 40%. You can't fault that. You can't fault the level of inflation. And the discipline has been sustained. So I say good action, but don't forget that we are not completely out of the woods yet. So let's keep an eye on inflation. Let's keep the discipline. That's important. Keep the discipline. But overall, it signals good things. Why? Lower lending costs eventually, and remember my word, eventually, because it's not like tomorrow we go into the market and costs have dropped. No, there will be a lag, and lending costs tend to be sticky downwards, so there will be a lag. But lower lending costs should mean that businesses that have access to credit, right? Businesses that keep their books well, businesses that are attractive to lenders will get money at a cheaper cost. Unfortunately, if your business is not transparent, if governance is shaky, if your books are hazy, you will find that the access to credit is not there. So in this case, what will happen is that those who have, they will find that it is cheaper. Those who don't, you're going to be in a little bit more trouble. But on the other hand, it's good news. It's good news. For the other flip side too is that Ghanaian assets are not as attractive as they used to be because the rates are going to come down. So we may find some weakening in the dollar. But even though January has seen some weakening in the dollar, it's more seasonal than anything else. And so up until now, I say, listen, good move. We applaud the MPC for doing the right thing, but let's not lose the discipline. And let's keep a sharp eye out on that inflation monster.
Okay, but you know, at the beginning of all of this, there was a lot of concern about the heat, in quote, in the economy. Has that heat died down?
Oh, the heat has come down.
Is it gone?
It's not. See, unfortunately, heat doesn't disappear like that. But it's at a manageable level. Listen, sometimes it's so easy to forget that a year ago, we were talking about completely different inflation rates, completely different exchange rates, completely different rates for our... So the heat has come down. And listen, remember, inflation is as low as 5.4. The heat has come down, right? But the heat doesn't go away. It goes into remission.
Well, maybe that's part of the reason why this governor seems very cautious.
Yes, you have to be cautious. It's in remission. It's not like the doctors have given you a clean bill of health and so you can go and do everything you like. They say your cancer is in remission.
Okay.
So you can cautiously go back to certain things, but not everything.
So the medicine is working, but you're not cured yet.
Yes.
A good one. All right, let me come to Professor Buedi. Prof, thank you so much for your time as well. Your initial thoughts on the policy rate cuts, was it what you were expecting, or you're among those who think it could have been better?
Mike, to answer your question, thank you very much for the invitation and good evening to my colleagues in the studio. I couldn't join, but I'll try and do that later, another time. Permit me to make these important clarifications here, that the MPC rate is by vote and is set, they set the rate. I must also indicate that the MPR is not mechanically calculated. It is just a policy decision, not a formula output. And I have several times questioned the modalities, the crude way of estimating this whole MPC rate. We have moved away from just a decision by having a formula that helps in the computation. And I've questioned this in one of my articles, which I published in Joy FM. But this administration, the governor, Dr. Asiama, started something novel when he took over. I'm sure for the first month or so, or the second, he was able to publish the decisions of the 5 or 7 committee members, telling the whole country decisions that they took. Was visible in papers, and we applauded him. I don't know why he has stopped in publishing this kind of important information. But the policy framework, the policy rate, it has a framework. And whenever you want to come out with a proper rate, you first of all have to consider the external conditions, the gold prices, the oil, international market, the external development. Then you can also look at your exchange rate, which my other colleague indicated. Then you look at the fiscal stance, as well as your financial stability rates. These are important. Don't forget also the output gap of a country, very important when we want to compute this. Years ago, we've been taught, and it's still in vogue, when we use the proper model, that is a Taylor rule. But now we have even advanced that format in our computation by adding the risk part, the risk premium part. But for the figure that I saw, a few days ago, and just to come back to your question, the figure has moved from 18% to 15, I think 15.5.
Yeah.
If we check month by month from January all the way to December, if you go to the summary of economic and financial data of the same institution, BOG, it tells you they started the year with 27%. It moved all the way to 27 and then 28. So you see the modal number in there from January to December happens to be 28%. And the lowest is what we have recorded in this year. When I took the data, analyzed using the model that I use, this is the first time, one way or the other, I probably will side with endorse this figure, 15%.
Okay.
4 months ago, I have critiqued the same number they put out there. I think it was 25% or so. And I said the basis point could have been more than what they came out with. But for this one, for 250 basis points, that gives you 15.5%. For me, it reflects the model that I used. And I'm sure BOG should probably move away from the normal decision and having a format that helps. Because all the indicators I mentioned, if you want to put them into a proper model, you have an exchange rate taking a nosedive, you have external factors helping your economy, you have fiscal stance also helping you, you can have a higher figure. And for just for people who would not understand, let's come back to the figure we're saying, the MPR rate. It is just how money is priced, how we price money in an economy. So when we have a reduction in the MPR rate, it signifies, it tells you that, yes, you have the positives and you have the negatives. But when we start talking about these, it will help readers. understand the positives and the negatives that we are talking about. But it just is a rate that signals, it's a signal rate.
Okay.
And it just anchors on interbank rates. It also influences your treasury bill yields. It also helps your Ghana reference rate as well. And then you can have the commercial banks, how we lend. These are the minutiae comment, but we can come to the positives and we can come to negatives, and we see its impact in an economy.
Now, Prof, I don't know if you can see the graphics we have displayed on the screen from your end, but you notice that the gap between inflation and policy rates has widened significantly. You see from 27% now with inflation at 23.5%. Now we have policy rate at 15.5%, 10 percentage points gap between that and inflation. Really, that widening gap, can you explain that to us? What's happening? And do you see it narrowing down further in the short to medium term?
Well, I don't have the chance of viewing what you have presented.
Okay.
But I'm sure you are trying to look at the relationship between the MPC rate and that of inflation. I'm sure that's what you're trying to project.
Yeah.
Yeah, and it's a simple relationship we have. Anytime we have an inflation going up, we use the MPR rate to cool it down. And it's vice versa. Just to stimulate growth or support growth. So anytime we see that relationship, I've not seen the numbers, but if we check from what I've given you in terms of the MPR rate from January, starting with 27 or so, at that point, I'm sure inflation stood at 23, if my memory serves me right.
Yes.
Because we started with the year inflation of 23, we moved all the way to, I think, inflation is now 5.3 or 5.4.
5.4.
Yeah. So when I see such a relationship, it mimics what we've been talking about.
Okay.
That when we have a drop in inflation, you don't continuously want to increase your MPR rate, because if you do the proper computation, this is one of the cardinal instrument or metrics that we use to compute the MPR rate.
So basically, from just looking at this graph alone, it shows that the central bank has enough room to continue to cut the policy rate further because inflation has dropped significantly, right?
No, I mean it will have a double-edged approach. Effect here.
Okay.
The issue is that when you keep reducing your policy rate over time, you're also likely to have inflation risk as well.
Is that risk really valid for an economy that has a cost-push inflation rather than on the supply side? Realistically.
Come again.
Our inflation is cost-push driven and not really money supply-led inflation. So aren't we being overly cautious with the policy rate when we can allow the market flow a bit more?
No, we also have to be careful, because if you cut the move too fast, demand outpaces supply. And that's what will happen. Because then those who also gives you resources and funding will not be interested in pumping money into the economy, because they won't have anything in terms of returns. So that is another thing.
Okay.
We have the downside of a too much reduction in policy rates, and we have the positive sides. So we don't need to look at only the positive sides, as I said. The negative sides are there. There will be pressure on the city in the long term. But the positive sides are overwhelming, where we have a relief for the government, because the treasury bill rates will drop. And that means that the government will not be paying huge sums of money. And from your intro, you even indicated that we are according to oversubscription for some time.
Yes.
And these are some of the positive things that we can also have. Banks also will have to reprice their loans. And borrowers likely also to borrow more and buy cheaper funds. So we look at the positive, we look at the negative. And I was happy when the BOG governor said we still want to continue to keep an eye on the market development. You can't do this and go to sleep. You need to monitor continuously in the market.
Sure. All right. Let me come back to you in studio, Mr. Jackson. For you as businesses, aren't you also concerned that despite the policy rates looking at least more attractive, Treasury bill rates are still relatively high as against inflation? So if you're not careful, banks may go back to the old cycle of buying Treasury bills instead of lend to the business community.
Okay. First of all, I want to acknowledge Prof. Good to hear from you. And I stand with you on most of your comments.
For today.
For today. Now, the key thing is this, right? That risk of banks just buying T-bills and recycling it to make a margin is always going to be there. For so long as the T-bills are only recourse to borrowing, it's going to be there. And the oversubscription shows you that it is happening to some extent. Of course, the central bank has put in place measures where they check your lending against your deposits. And if you are not lending enough, you pay a little penalty. But it's there. There's nothing we can do about it. The government is borrowing, and that's the sole recourse to borrowing. So that risk is there. But I also think that even though, borrowing T-bill rates are relatively higher, but they're relatively high against inflation, lending rates are still positive. Think about it. The margin between your lending rate
and inflation
and inflation, lending rates are averaging around 20.5%, 20.4, 20.5%, and the inflation is at 5.4.
It's about 15 percentage points.
There's a significant positive margin there.
But at a risk.
At a risk. The issue is that if institutions just go for T-bills and recycle them, they will make some profit. Those who work hard, those who take the risk, price the risk, and do real banking will earn a return above the T-bill rate. So there's still, even though the risk is there, there's still room for banks to operate. That is why in my initial comments, I said, listen, if your books are right, if your governance is right, if your institution is run well, transparently, you will find that you will receive money at a lower rate. If you don't, you will find that the door is closed and nobody will give you money anyway. Because the institutions are watching their NPL rates, the default rates, as cautiously as they are watching everything else.
And I think at least we've seen some improvements in the non-performing loan ratio since the policy rate also dropped significantly over the period. But Prof, let me come to you quickly before we go on a quick break. Do you think that the Treasury bill rates should stay where they are, or government should go back to its earlier strategy of cutting the rate significantly to sort of force banks to consider other options, including actually lending to the business community?
Well, I think banks do exist they buy money and sell money. And in that process, they have a spread, and that's where they also make profits. So at any point in time, they're looking for a safe haven, one, for their capital, and they're also looking for giving return to owners of the bank. So they're always looking for opportunities where they find they will do investment. As whether the government should continue to cut the rate. The government also, on the other hand, looking at where it will not pay huge sums of money in terms of cost of borrowing, attracting funds for projects and for development. So it's a win-win situation. The bank looking for profits, the government also looking for money and looking out for where they'll pay less in terms of attracting the funds. So we are all playing the game. But as in operating an economy or managing an economy, sometimes it's not all about looking for in terms of making profit in this area. But government in this case, when we have a further reduction or a continuous reduction in terms of the MPR rates, it's a relief to the government, because yes, you don't end up paying huge treasury bill rates to other people. But if you also don't take care, you lower it to the extent that people will not have that appetite to bring you or buy your treasury bill rate. What happens to you? Because they're not getting any return for their investment. So it's a game that must be played by the two sides, one looking for profit, one looking for a safe haven for their capital, and the bank, the government on their hand, looking for funds, as well as looking for where the cost of borrowing will not be that huge. But what BOG is doing is shifting to more accommodative or easy monetary stance. That's what they are trying to do now. And just to reduce inflation risk receding and then support growth. That's the strategy of this the BOG governor.
Okay, you're still watching Business Focus here on TV3 with me, Michael Obodo. I have my guest here with me. We'll be going for a quick break. When we come back, we'll continue the conversation. Stay tuned. Welcome back. This is Business Focus on TV3 with me, Michael Lubudu. Now, every day people face different emergencies: police emergency, fire emergency, medical emergency, you name it. But many Ghanaians don't know their emergency numbers. Well, here's one you would always want to remember. Star 770 hash. Yes, star 770 hash is the new EcoBank Money emergency number. Star 770 hash gives you instant access to loans, fund transfers, utility payments, airtime and data purchases, and so much more even without data. So there's no need for you to panic when you find yourself in any money emergency. EcoBank will always come to your rescue. Dial star 770 hash now for solutions to your money emergencies. EcoBank, the Pan-African Bank and proud sponsor of Business Focus, as well as Telecel. Well, we'll move on to our next conversation. Now, in a fierce debate has erupted among economists and policy makers following revelations that the Bank of Ghana slashed its gold reserves by 50%, just as global gold prices for the precious metal reached historic highs over $5,000 per ounce. Official data released in late January 2026 confirms that Ghana's gold holdings plummeted from a peak of 37.1% tons to September 2025 to 18.6 tons in December, involving the liquidation of approximately 18.5 tons, and occurred just before gold surged past the $5,200 per ounce mark. The Bank of Ghana has justified the move.
Gold holdings going down to 18.6 tons. At the last MPC, I remember we spoke about a rebalancing of our portfolio. And what we did was to look at our peers, our peer countries. We observed that most of them were holding between 20 and 25% of their portfolios, as gold. At the time, we were holding a little over 40%. And so decision was made to diversify, and that is what you see. But the FX that was earned as a result is there. It is earning, dividends. And so it is contributing to reserve accumulation. And so no worries at all. And as you are aware, we are building all the time. We are rebuilding all the time. And so this year we will reaccumulate once again. We'll be down to that level. And we will ascertain, we'll evaluate whether it will be optimal to hold it at those levels. And maybe let me just clarify. It is true gold prices have risen to record levels, way above 5,200, I'm told. You have to understand that there are several factors that drive gold prices. Some of these factors are transitory, some are structural. Now, what you see at 5,200 may be more of transitory factors. It may not be permanent.
So that was the governor of the Bank of Ghana justifying the decision to reduce significantly the country's gold reserves from over 30 tons to somewhere under 20 tons. Joe Jackson, what's your take on this? A pragmatic move or a hasty one?
In truth, time will enable us answer this question a bit better than we can today. Because you see, there are two sides to the equation. One is that was the central bank getting the benefit of increasing its gold reserves so much? Now, some have argued not. And that after a certain point, we're not going to get a benefit in increased gold reserves. And in fact, that has been partially proven by the fact that the drop in gold reserves has not been replicated by a drop in CD value.
Okay.
So look at it this way. My reserves show up my value.
Yeah.
If my reserves drop by 50%, and
the currency hasn't depreciated significantly,
then it means that I'm not getting value for that 50% that I was holding.
Okay.
Right? So
or liquidating it hasn't affected the currency that much.
Thank you.
All right.
Liquidating hasn't. So for now, it seems like we are okay.
We are okay.
That the liquidation has been reasonable. So you can't, at this point, you can't say it was a hasty move.
Okay.
Right? Also, remember that somebody has to determine that at 5,000, is that going to be the peak? Or is gold going to rise all the way to 6,000 and beyond? Somebody has to make an estimate. Somebody has to say, I'm getting out of it when my gold is at its peak value. Somebody may say, but it's going to rise. I think that gold may be nearing its peak. We don't know. Remember also that one of the reasons why he's talking about the speculative and transitory nature of the pricing could be that a lot of it is due to the instability in the global world at this time.
Exactly. Gold becomes a safe haven.
Gold becomes a safe haven. Will this instability continue?
Yeah.
At this moment, we don't know. It is, you see, the difficulty with this instability is the unpredictability of the US behavior and Trump. Whilst it is increasing the stability, it doesn't also say whether tomorrow somebody is going to wake up and decide that, hey, this thing's not going right, so let's change course. For that, I would say, for now, I'll say we haven't suffered any negative effects yet.
So the end has justified the means?
So the end, dropping the reserves, since it hasn't negatively impacted our evaluations, etc., it's okay for now.
Okay.
But we've got to keep watching. Again, you've got to be cautious.
It looks like that's our anthem right now, being cautious.
It has to be. It has to be. We forget that a year ago, January by this, February by this time, we're still not out of the crisis yet. The new budget had not been read. Rates had not fallen. It was after February that things got started getting better. So that's too recent. We have to be cautious. There are major headwinds above. Okay. There are major bills to be paid in dollars this year.
But you have a strengthened currency, so you shouldn't be too worried because at least your external debt has reduced significantly because of the strengthening of the currency. So you still have some room.
But you still have to pay.
Fair point.
You still have to pay.
Let me talk to Prof. Prof, you have a contrary position, I believe, on this whole gold reserve issues. What really is your point? Prof, we can't hear you. Could you please unmute?
Yeah. Can you hear me?
Yeah, Prof, please go ahead.
Yes. Let's have a broader discussions on a specific issue that happened.
Okay.
What happened was that gold holdings collapsed. 27.1 tons to 18.6. That's a 50% reduction of your gold holding.
Yeah.
When it happens like that, your gold value also will drop. And we expect your reserves and other indicators must also improve. Fine. But Mike, let me say this. I totally disagree with the governor on this position. It is based on the motive of having within one quarter from 27.1 tons to 18.6 tons. Just go back and go through the reasons the governor assigned for this exercise.
Yeah.
If you have his statement, I'm sure along the line, he said it is because they were what most of our peers
in the sub-region
were holding between 20% to 25% of the gold at the time that we were having 40%. The government must also tell us, out of these countries, which of them depleted their strategic assets to that magnitude? All right?
Okay.
Once you can quote your peers, tell us how many of them also at the same time depleted their strategic assets, that magnitude. You see, this is not a routine reserve management. No. Central banks do incremental rebalancing, and it said rebalancing. They do incremental rebalancing, not having strategic gold reserves in one quarter. All right? Now check the numbers from the same economic and financial data report. You see, selling a high price, at that point he said gold price have been going up.
Yeah.
So selling at a higher price can be smart. It's understandable. But selling half your stock at once destroys your value.
Why?
So what is wrong here?
When you have the potential to rebuild
Let me go back to the figures here. Mark, do I have the permission to do that?
Please do, briefly.
Okay. You check the same data. Check the balance of payment data.
Okay.
That gives you your current account, your investment, and the three segments. The country recorded about $13.6 or so billion in terms of the trade surplus.
Yeah.
We record about 9.5 or 6 billion in terms of our current account payment surplus. So naturally, you have your reserves. Your reserve will be replenished. So what happened? Unless BOD they tell us that the funds they were receiving were not coming into the account.
Okay.
Because naturally, you would have increased your reserve. Now check your exchange rate too. If the motive was to help stabilize the dollar, check the moment, check the stability. Did we achieve our goal in taking care of depleting half of your strategic asset? Because your other peers were having more.
That's a critical part of the conversation that unfortunately we've run out of time. Would have to bring you back in studio to hopefully join us in studio to land that point for us, because I think I see where you're going with this, but it'll be important to interrogate the numbers further and get to the bottom of this. But Prof, thank you so much for your time. That was Professor Isaac Boadi from the University of Professional Studies. I also had in studio with me Joe Jackson. He is the CEO of Daylex Finance. Thank you so much, gentlemen. That'll be all for today's edition of Business Focus. For more business stories, please visit our website at 3news.com/business. I am Michael Obodu. Thank you for tuning in. As always, please stay safe. Catch you next week.
Business Focus is brought to you by EcoBank, Telecel,